When Prime Minister Narendra Modi called the recent GST reforms a Diwali gift, the timing could not have been more striking. Just as India is bracing the sting of a 50% tariff erected by the United States, its single largest export destination, the government has rolled out the biggest tax reset since 2017. The reforms are more than symbolic, they are designed to cushion the economy at a moment of acute external stress. The numbers tell a layered story. On one hand, GST rate cuts are expected to place more disposable income in the hands of the ordinary Indians, boosting consumption, which already makes up about 60% of the GDP. Economists estimate the reforms could shave more than a percentage point off consumer inflation and add between 30 to 70 basis points to growth in financial year 26. For industries like automobiles, cement, and consumer durables, this is nothing short of a booster dose. Yet, the reforms come at a fiscal cost. The direct revenue loss of about 48,000 crore rupees, roughly the 0.13% of the GDP, tightens the government's fiscal math. Without efficiency gains and careful spending adjustments, the deficit could widen beyond the target of 4.4% of the GDP. Policymakers are counting on rising GST buoyancy. Monthly collections have been hovering near 2 lakh crore rupees to offset the shortfall. Still, it is a delicate balance to strike. Across the ocean, Trump's tariff tirade is already reshaping India's outlook. Exports to the United States account for nearly $85 billion or 2.5% of the GDP. With duties hiked steeply across sectors, Citigroup estimates a downside risk of 60 to 80 basis points to India's growth. The rupee has slipped to record lows, reflecting fears of shrinking export revenues and capital outflows. This is where the timing of the GST cuts matters. While tariffs drag the external sector, tax relief fuels domestic demand. It is, in effect, a push-pull scenario. One set of forces weakening exports and the rupee, the other lifting household spending and the sentiment. The reforms, as Revenue Secretary Arvind Srivastava points out, are not merely reactionary but part of a long-standing vision that lower rates drive higher compliance and buoyancy. So, was this move perfectly timed or carefully planned? The answer may be both. Politics frames it as a festive windfall, but economics reveals a strategic cushion, ensuring India's growth engine keeps running even as global headwinds stiffen.